Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt, and in today's video, I'm going to talk about the trades I executed for September 10th. We're going to talk about the cash secured puts, and that's pretty much it. I ran one trade today. I wanted to take today really easy. I had a massive amount of gains Monday and Tuesday, so today I wanted to take it easy. I didn't want to find myself in a situation where I'm overpaying for a specific stock. So I wanted like a day to reflect on what exactly I needed. Even when I made my video last night, I really wasn't sold on what I should do. But after today, seeing how the market was pretty consistent, I think I'm going to buy back some of my Oracle cash secured puts and then just run some cash secured puts on QQQ instead of Oracle. Even though Oracle premium is pretty high, I definitely think Oracle's going to pull back because, you know, to gain 30% in a day, hedge funds are like, man, we're going to cash out big time. So they're going to probably shoot that stock a little bit lower. I don't know how low it's going to go, but I definitely think it'll go back down to the 300s or some. I'm just speculating. Yeah. But for anyone that's a new viewer, the first thing I like to talk about on my channel is my account overview. Right now, it's $191,281. Yesterday, it was at like $200,000, but I don't think Robinhood calculated where I have my strike prices for my covered calls. So I was only capped to about, you know, $240 for Oracle share, and then it shot up to like 330. So it assumed I had the shares up until 330, but I didn't. I only was able to lock in the gain up until 240. So now today the number is accurate. It's about $191,000. But in the last week, we've had some massive amounts of gain. So the sum I use to generate daily income, and this is transparency. My account has been slowly going up since April. And here we are. Let's head over to my spreadsheet where we're going to talk about the last 104 days of trading. Since I've transferred my strategy from high income ETFs, covered call ETFs, into my own options trading, you guys will make a determination. Is this working for me? And maybe this might work for you guys. Let's head over there. Okay, now that we're looking at the spreadsheet, we are on day 104 in 2025. I started this options trading back on April 11th, so I wasn't able to collect a whole year of data. So some of these numbers, I might throw out some estimates, but I'll let you know where that is. For today was a very basic. I only had enough cash secured put income to make $42. That's all I made. I made $42, nothing too crazy. Today seems really low, but if you look at Tuesday and then Monday, we're really high. So I'm definitely okay with this number. Sometimes it's okay to take a day just to get a feel for the market and then re-strategize about what the next move is. I definitely won in the last 2 days, and I didn't want to make a dumb mistake, you know, moving forward. So I just wanted to take it easy. Tactical patience is okay. For my account overview, like we saw in the Robinhood, somewhere around $191,000. So that's where it's at. From the amount of premium and appreciation gain I have realized, I have made about $40,206 in about 104 trading days. Usually in a 12-month period, there's about 250. So I'm only going to be able to hit maybe 180 when all the dust settles, 182 days. But not too bad. From the amount of initial investment I had in 2025 to where my account is now, I'm up 30.76%, which is absolutely bonkers to get 30% return in, you know, for, I think, what, 5 coming up on 6 months of trading. So that's actually a fantastic number, and I'm pretty stoked to see my account perform that way. Looking at the day change in value, it went down at negative 6.96%, but that's because Robinhood didn't calculate my covered calls correctly. I was capped to a certain point, and then they calculated it wrong yesterday where they assumed I didn't have a cap point. So then my account looked like it was really good. It was at $201,000. Like I captured all of the Oracle appreciation, but that did not happen. I locked in my gain at $240 a share, and today they corrected it. So that seems right. It's not really a negative number. That's more so what the accurate number is now. And then we're comparing this to the SPY. SPY was up 0.41%. And since I've been tracking my account to the SPY since August 20th, I'm up 11.29% versus the SPY was only up 3.05%. So I'm definitely outperforming the SPY a little bit. Most of the time I'm running covered calls and cash secured puts on QQQ, sometimes on the SPY. But lately I have been choosing a specific stock. My winner lately has been Oracle, if you guys didn't know that or didn't follow. But I definitely change it up from Oracle to Amazon. I once every blue moon might throw Tesla in there, depending on if I like where the price is at. So yeah, that's kind of what I'm doing here. Looking at my trade win percentage, winning 98.08% of my trades, 102 winning days, only 2 losing days. The losing days were just growing pains from running your own options and how your different brokerage reacts to certain events. So sometimes you just have to pay the troll toll, you know. I'm averaging about $386 of premium per day. If we look at that as an average weekly number, that's about $1,800. And then looking at that as an average monthly premium, I'm making about $6,600 per month. So I literally have like a full-time employee that's the stock market, you know, making the median American salary. If we look at this yellow section here, these are estimates based off of my actual data. So the way I came up with this yearly income of $95,000, I basically took the average weekly premium, multiplied it by 52 because we have 52 weeks in a year. We came up with $95,000. I think this is definitely a little bit elevated because I had a huge last couple of days. Ideally, this number ranges somewhere between like $78,000 to about $85,000. That's a little bit more realistic, just to kind of give you guys a, an effective range. If you look at the average yearly percentage estimate, so that if you take that number, take this $95,000 and compare it to my initial investment, that's about a 65% return on the year. And I've seen this range somewhere between 49 and 66%. Looking at 2025, we have about 78 trading days left. That's about 16 weeks. So theoretically, I should make another $29,000. Ideally, what my goal is I want to make about $1,000 a week. So if we have 16 weeks left, that's about $16,000. Common sense, right? I like to keep things very simple here. I don't like to use crazy terminology like naked calls and that stuff. Is just everything to me is just a covered call or cash secured put, like, or buy call or buy put. Keeping things very simple. Moving on to this section here, these are estimates based off of my trading performance. I will say this with a caveat, these numbers might look a little bit too good because I have such a small sample size, and the small sample size I have has been trading very well. Every 2 years, there's going to be some sort of like a 10% correction. We definitely hit our 10% correction back in April. So I think 2 years from now, the market is going to continue going up. Maybe next 12 months, then we'll see another correction. And then every 6 years, that's when there's a like a bear market where it's like 25% or lower. I don't think we're in bear market territory right now, but yeah, we just hit our little correction point with the tariff time. So I think we're about 12 months away from, maybe another 18 months away before another micro correction. We'll see. Nobody really understands the stock market. Sometimes it goes up, sometimes it goes down. World War III can happen tomorrow. So we don't know. Ideally, for this estimated income, for anyone that's a new viewer, the way that I'm going to operate this is for every year, I'm going to input the data based off my trading performance. And then each year I'm going to sell lock it. And then anything that's after the sell locked years, these are going to be estimates based off my trading performance. So like this $1,800 per week, is going to calculate into these formulas. So for 2025, we don't have any of the data fully filled out because everything is just an estimate right now. 2025 has not completed. I'm only going to trade about 8 months in 2025, so the numbers might not look as good as what we'll do in 2026. But looking at 2025 numbers, I should make about $69,000 in total income. We're already at $40,000, and we have about 78 trading days left. So there's a lot of potential for us to actually hit this estimated income. I'm a high income earner, so my taxes get wrecked. Maybe next year I'll start looking into tax advantage strategies. But at the end of 2025, I should have an account, once you take taxes away, to be about $206,000. The amount of estimated income I'm going to get after taxes is realistically $45,000, and that should be about 31% return. For anyone that's been watching my series, my daily trading, my first mile marker is going to be 2030. And the reason why I am doing this type of trading inside of a Robinhood brokerage and not into a 401k, because ideally, I would like to use this money when I'm young, healthy, and able to enjoy the money more effectively. I would rather, have a little bit less in the future, but be able to use the money now, because why do I want to have a lot more money when I'm 65 years old, but not as healthy? This is the healthiest you're ever going to be is today. Tomorrow is never guaranteed. So ideally, I want to find the right balance between, of course, like saving up and making sure you're financially secure, but at the same time, being able to utilize that money. You don't have to have it tied up until 59 and a half years old. Also, somebody in the comment section, I think it was you, Donnie, mentioned that you can potentially retire at 55 without being penalized, but then you still have to pay taxes on it. If you still have to pay taxes on it, you might as well put it into a brokerage and then be able to use the money now, or at least be able to invest into like VU or SPY, hold it long term, but then borrow against it, maybe running other options so you can generate more income. So that's the first thing that came to my mind when I read that comment. So ideally, I'm doing this one because I want to get off my W-2 income sooner. Like, I don't hate my job, but at the end of the day, like, nothing is guaranteed in life, right? So I want to make sure I'm financially stable, that if something happens, right? That's the second reason. This is a contingency plan. By having this type of account that you can generate your own income, if you get laid off or have some sort of life event that's super expensive, you might have some medical expense, get laid off. There's crazy things that can help. You can help your family. There might be in a different situation, money allows you to be giving, right? And that's the one thing about humans is we're like a communal species, right? We like to give back to people, and it gives us joy to do that. And the best way to do that is you need to be financially secure yourself before you really can help others. So this is one of those mechanisms to do that, right? If you have a family, you have children, this is a fail-safe mechanism that, hey, if something happens to you, you'd be able to support your family. Literally, for me to make all this money takes me about 15 minutes in the morning. Maybe I spend a little bit of more time in the afternoon just to kind of look at the charts and just figure out what I want to do for the next day. But it's really not that much time. All right, if you invest in the winners, the S&P 500, the QQQ, you're going to have a good time. If you start investing into bad stocks, you're going to have a bad time. All right. And outside of the contingency plan, third reason why I like to invest is maybe I might actually continue liking my job, which I actually do like my job. Maybe I like my job, but instead of, having to like use your W-2 income to pay for a car you want or the house you want, maybe you can invest and use this strategy to then have more money so that you can buy the house that you want, instead of settling for, hey, this is our budget, versus if you have this type of account, now you're able to be more flexible with the things you can buy and make your life better. You can give your family vacation. You can take your kids to private school. Like, there's a bunch of different scenarios that can come into play with this type of investing strategy, instead of, hey, let me put all this money in 401k, set it and forget it. Like, there's nothing wrong with that approach. Like, if you're not going to be active in the trading, that approach is going to work. You're going to put the money in there, it's going to grow, and you're going to have a good chunk of change. But for me, I'm 31 years old, about to be 32 in October. I would prefer to retire sometime, 10 years from now, ideally at 2035. I'd be really happy to retire by 2035. That's the point where I'm aiming for. And you need to have a little bit more liquid cash when you want to retire sooner. So that's what my strategy is. Everyone is in a different walk in their life. Some of you guys might be close to retirement, so it just makes sense to keep shoving the money into the 401ks. But for some of the younger crew, it's like this would be a good point to start thinking about what you want your future to look like. So 2030 is my first real stepping stone, and that stepping stone, making $548,000 a year, seems pretty good. That'd be more than enough for us, me and my fiance right now, to stop working. That should be more than enough to cover our bills. But ideally, you also have to figure out the right touch point of how much money should I keep in the account, because every year the SPY is going to grow somewhere between 8 and 20%, right? So you have to keep enough money into the account so you can continue buying 100 shares so you can run covered call contracts, or you have enough collateral money so that you can run cash secured puts on the QQQ or the SPY or whatever your ticker of choice is. So ideally, even if I had to keep half of my estimated income into the account, living off of $250,000 or $275,000, that's gonna be plenty of money. And the account should be at $1.2 million. However, if I decide to grind it out a little bit more, maybe try to pay off my house, once the house is paid off, like, man, life is gonna be good. So if you really focus hard to pay off a house, sacrifice a little bit, maybe have 1 or 2 less vacations, but push really hard to have your house paid off, by 2035, do you really need to make $3.1 million? If at 2035 I had a house fully paid off, I'd be fine making $134,000, because we don't need that much money. Like, how many vacations are you going to take where you're really going to enjoy it? After a while, if you keep doing the same thing over and over again, it's going to dilute, the enjoyment out of it. But yeah, 2035 is definitely, $3.1 million that if I'm making that, I would even say by 2032, if I'm making $1.1 million by 2032, that's more than enough, way more than enough. Count of 2.5 million, guys, I'm not working anymore. But we don't actually know how this is going to perform. I have such a small sample size of data that we don't know if this is going to be realistic. I've only captured a bull upside. I haven't really traded into a bear market. And let's talk about the bear market. People will keep asking me how I'm going to trade during that bear market. I'm probably going to trade exactly what long-term buy and hold investors are going to do. They're just going to keep buying the dip with some extra cash. But from the stuff I do own, I'm just going to wait until it goes back to the normal trading numbers, to my normal buying costs. Like, sure, I might try to, push out the expiration date so I can capture some, premium during the time. So some premium is better than zero premium. So ideally, I'm still going to be thinking long term. I'm still going to wait for that red period to go past, right? I'm not going to be selling below my cost basis. I've been bit twice already selling below my cost basis. I'm just not going to do it. I'm just going to wait. I'm going to be patient. And if I'm going to have to incur a margin cost, that's fine. But, if I'm still working, it doesn't really matter. And ideally, if I stop working and start incorporating this strategy full time, I'm probably not going to use as much margin. But let's go to the dream scenario, guys. Say I do want to work till 59 and a half. I think I'd be like 58 by this point. I should have about $10.5 billion. Three comma club, baby. Let's go. I would be making about $10 billion. And in the count, there would be $23 billion. Crazy to hear that the B's are even a potential for me, because I grew up on the south side of Chicago being poor as hell, and I had to join the military because I didn't know what I wanted to do in life. And to have a potential opportunity to have a B in your account, that's crazy. Even if this is 1/10 this number, that's a massive win. That's still $1 billion. If it's 1/20th, I can't do math, but that's still a very big number. Cool. So that's just kind of the thought process of, that's the vision I'm trying to show you guys. That could be a potential reality, for anybody. But the thing is, you have to choose good stock. If you're trying to wheel and deal some non-S&P 500 stock that's $10 a share, there's a high potential that you can lose your money, because some of these stocks, they don't have revenue, they don't have growth. It's just like, there's all complete speculation. Don't invest on speculation. Invest in the stuff that's a winner. If you can't afford, 100 shares of SPY or QQQ, find a different stock that you can buy 100 shares. Like maybe Amazon. To buy 100 shares of Amazon, you need like what, $24,000. I would rather you guys save up the money to then buy 100 shares of a good stock versus buying thousands of shares of a trash stock that might go bankrupt and you might lose half your investment. Don't do that. Invest in the winners. There's a reason why they're winners. Not everyone in life could be a winner. There's always a first place, guys, and there's always all the people that didn't even make the top 3 podium. Okay, pick the ones that are on the podium. Pick the ones that are winners. All right, let's head over to the weekly side. So for this week, guys, between my $5,300 Monday, my $1,005 Tuesday, and then my $42 Wednesday, which was quite small compared to the previous 2 days, for the week, we're at $6,346. Let's head over to September. And for September, we're at $7,129 on the month. And that's after 8 trading days. That's crazy. 8 trading days and $7,000. That's crazy. All right. And then for the yearly tracker, we have already talked about this. We're at $40,206. Cool. Let's head over to the other side of the spreadsheet. This really isn't going to be too sexy. It's going to be one entry. So we are there. So for this QQQ cash secured put, QQQ opened at the 583.77, which was quite high. This is definitely the highest I've ever seen it. So I decided, I didn't think it was actually going to end up being that high. And then at the end of the trading day, it was at the 580.70. Luckily, I chose the 579 strike price, so this option wasn't assigned. The reason why I chose the 579 strike price is because I've held these two QQQ covered calls at the 580 and 581 for quite some time. And by quite some time, I mean, these were my cost bases for my 100 shares of QQQ. 100 shares were at the 580. The other 100 shares were at the 581. So I've had these ones. I can't even remember when I bought them, like 2, 3, maybe 4 weeks ago. And QQQ hasn't blown past this point. So the reason why I chose this 579 is because if I can get a better buying point than the stocks that I currently have, I'm going to try to do that. That's why I chose the 579. And then luckily the market didn't go below the 580. So tomorrow, like same thing. I might run this at the 578, 577. We'll see. That's really much it. Made $42 of premium. Nothing to write home about, but that's all the options collateral I had remaining. I didn't want to do any more. I didn't want to buy another 100 shares of QQQ. I've already made enough money. But I think for tomorrow, I have 4 cash secured puts of Oracle, these 4 right here. I'm probably going to buy them so I can close them out, so then I can free up about $90,000 of capital. So theoretically, when I close out these Oracle cash secured puts, then I would have enough collateral to then maybe run a second cash secured put on the QQQ. So let's head over to Robinhood. Let's look at what some of the numbers might look like. All right, team, now that we're back at Robinhood, let's start talking about the trades for tomorrow. So for the Oracle cash secured puts, let's go over there. So I have about 4 of them. I have one at this 217, one at this 222, 220, and then 227.5. So I'm probably going to close those out tomorrow. So for me to close out this 227.5 is going to be $2. This 220, $1. This 222.5, $2. So it's going to be not too much money. So at the end of it, I might spend about $10 to buy back my options. Usually I just like to let my options expire worthless at the end of the Friday, but there is a potential opportunity to make more money. So I might take advantage of that. I will take advantage of that tomorrow. So I'll probably buy them back. We'll see what the market looks like, but ideally probably cash secured put on QQQ. Maybe I'll run one on SPY, see where it's at. Let's take a look. Go to QQQ. Boom. Okay. Trade QQQ options, sell put. It's going to be expiring tomorrow because it's going to be a daily cash secured put. Let's take a look at what these numbers will look like. So right now, QQQ is at the 581.63. I think that's a little bit too high to do at the money at this 581. That delta is about 0.48. So there's a 48% chance of it executing. So that's like a 50-50 shot. I think it's a little bit too high. I don't want to buy another 581 and then for it to just shoot back down to 570. So let's take a look at what this 579. Man, that's actually a ton of premium. 327. Jeez. If it is that price, we'll probably just leave it as is. But if the premium is, oh, that's a call. My God. All right. I was looking at the wrong option. It happens, guys. But for me to run a cash secured put, I have to do sell put. So QQQ at the 581.60. Is it still? Yeah, it's about 51% for this 581. It's about $235 of premium. If the premium is this high overnight, tomorrow might be a red day. That's what I've observed. Or that these options will be about 25% less in the morning. But if the options look exactly like this, I'd probably choose this 577 for this 108. Let's take a look at what that delta might look like. Yeah, 0.27. Whenever I run cash secured puts, I like running a 0.25 to 0.35. So that 25% to 35% execution, I prefer that. The premium is relatively good for that number. So I might just run this for tomorrow. Continue. Basically saying I need about, let's see. Yep, I need about $57,000 of collateral. Review the order. I'd make about $107, $108 of premium. Collateral, $57,700. Submit it. There it is. That's one option. And then I can only put in one right now, but then when I buy back my Oracle cash secured puts, then I would be able to run my second cash secured put. Yeah, that's pretty much what I'm going to do for tomorrow. Run this 577, but let's take a look at what SPY might look like just so that we can get an idea. And then maybe let's take a look at Amazon. Trade, SPY, option, sell, put. If I'm trying to do sell puts, I don't want to buy any more shares and incur margin costs. But dang, SPY is at the 653. Premium's pretty good. Let's take a look at the 649. 0.27. Yep. This $95 of premium would probably be my winner if I were to choose the SPY. But you would need about, $65,000. The nice thing about QQQ is you could use a little bit less money. It's about $8,000 less compared to the SPY. So it's really shooter's choice. Speaking of shooters, rest in peace, Charlie Kirk. Guy was just, spreading his ideas out there, and then somebody was emotional and couldn't handle ideas, so they decided to kill him. That is no-go criteria. It's actually terrible for our country. No matter if you like the guy or not, no one should get shot for their opinion. Cool. Off my soapbox. So looking at Amazon, let's go to trade Amazon options, sell put. These expire weekly, so the next expiration is going to be Friday, September 12th. So there's going to be about 2 days where this is going to do its thing. So Amazon's at the 231.32. So ideally, this is going to be the trade-off. I could either run one QQQ cash secured put, or I could run 3 Amazon cash secured puts for almost the same price. It'd be about the same price as the SPY, but for QQQ, I'd be able to run maybe 2-ish, or depending on what strike price I use, I could probably squeeze 3 in there. But yeah, if you were to buy Amazon at this 225, that'd be a really competitive buying price. So I might run a 2 cash secured puts on Amazon tomorrow. So we'll see what the premium looks like. We'll see what the market is. If market's green, market's red, that makes a determination. If market is red, maybe I don't want to run a cash secured put, closer to at the money. I'll just choose something further away. Versus if the market's green, I'd be safer to choose something closer to at that trading price. That's kind of the trade-off I do whenever I choose my options. But I think that sums it up, guys. I really don't have anything more than that. So yeah, that wraps up the video. Hope you enjoyed it. Hope you learned something new. Today wasn't really a super groundbreaking video. $42 of premium. I took it easy, took the foot off the throttle just so I can take a tactical pause so I can see what the market does today. I didn't know if it was going to keep shooting higher, especially for like Oracle, or if it was just going to rebound a little bit, regress. So it was good to take a tactical pause. We'll see what tomorrow goes, and then we'll execute our plan tomorrow. Buy back some of these Oracle cash secured puts, run a cash secured put either on Amazon or QQQ. So that's kind of what the plan is. So let's execute. Matt out. I will see you in the next video.